Hello to all you YouTube viewers out there. I assume most of you that are viewing this are interested in the stock market. My name is Peter Eliades. I've been around the stock market a long time. I started a newsletter back in 1975, over 50 years ago. It's hard for me to say that. I'm just a young man. Anyway, I'm sure there are many of you out there, especially younger people, that have never heard of me, even if you are interested in the stock market. And for that reason, this is kind of an introductory to you people out there. But the most important aspect of what we're doing today is announcing the availability of the Eliades price projection software for TradingView clients and subscribers. I can't tell you how excited we are to be able to do this, because there are literally millions of TradingView people out there that I'm sure have never been exposed to the theory of stock market cycles, especially the way that we use them to incorporate our price projection theory, which is incorporated in the software, which tells you where the market is going with good percentage degrees of accuracy. I could say you will never need another piece of technical software. The RSIs, the MACDs, the momentum, the cycle finders, the measure this, measure that. What you get with our price projection software, if it's working perfectly, you get perfect price projections. We have found with experience that those price projections work well over 70% of the time, sometimes as much as 80 and even higher. With the idea of introducing myself to those of you that do not know me, I have some information on the screen here, but first let me show you this book. This is a book from Bloomberg Press in New York City, yes, the Bloomberg, that was published, I think it's probably about 25 years old now. And the title of it is, as you could read there, New Thinking and Technical Analysis, Trading Models from the Masters, written by Rick Ben Sr. Rick did a great job in getting a lot of market analysts together, disclosing the way they analyze the market. And one of the chapters in this book was written by me. I believe the book's still available, even though it's 25 years old. Probably check it out on Amazon if you're interested. And you will become interested once you see how these cycle projections work. The other thing I'm showing on the screen here, and some of you may have read some of it already, is you're going to hear from people, oh, geez, Eliades, he's a perma bear. Oh, man, he's been calling this. He's so bad. What I would encourage you to do, rather than listen to people's opinions of market analysts, is to go to those who have followed market analysts professionally for decades and see what they have to say about them. And in that regard, Mark Hulbert is one of the top of all the writers that has examined financial newsletters and those that interpret and attempt to predict the market. There's one or two things in here. I'm going to read it. Read along with me. If you're not interested, you can fast forward, because there's at least one, maybe two things in here that I'd like to correct. Mark Hulbert is the founder of Hulbert Financial Digest and a prominent financial columnist, best known for his decades of independently tracking and ranking the performance of investment newsletters. Peter Eliades, now this is one thing I'd like to correct, who passed away in 2025. No, honest to God, I'm still here. The Peter Eliades that he's talking about is actually a Peter Eliades from Las Vegas, Nevada. And he was an interesting guy. He owned some of the largest strip clubs in Las Vegas, and people often teased me about that fact, perhaps once in a while mistaking me for that Peter Eliades. And he did indeed pass away in 2025. I did indeed not pass away in 2025. I'm still around. So I'll continue. Now, again, this is from Google search talking about Mark Hulbert and Peter Eliades. Eliades was a highly respected veteran market technician and the publisher of Stock Market Cycles, renowned for his long-term tracking of market cycles and successful bear market navigation. The connection between the two figures centers around performance tracking and analysis. When they say two figures, that's Mark Hulbert and Peter Eliades. For decades, Hulbert tracked Eliades. Please read this carefully for those of you that are listening to the Johnny come lately name callers and those that have been analyzing the market for 4 years and believe they're geniuses. For decades, Hulbert tracked Eliades' Stock Market Cycles newsletter, frequently citing Eliades as having one of the strongest records in the industry, particularly when it came to predicting and surviving severe bear markets. Eliades was famously fascinated by cycle and trend analysis, utilizing tools formulated by past market masters like J.M. Hurst and Edson Gould. He looked at hundreds of different cycle lengths, and Hulbert's reviews consistently focused on the bottom line results of these complex timing methods. In 1989, Hulbert named Eliades the top performing investment newsletter for the previous decade. And not the last year, no, not even the last 3, 4, 5, for the previous decade, the top performing investment letter. Later, during 2007 to 2009 bear market, and what a bear market that was, Hulbert noted that Eliades Stock Market Cycles was one of only 3 advisories to rank in the top 10 during both the 2002 and the 2007 bear markets. I'll leave it at that. You can look upon this as being something that looks like vanity for me. What it is validating my professional life and all the things that I've done in this business. So now, my software producer, born in Germany, lives in Dubai, Stefan Sugarman, has written our price projection software for TradingView. And how exciting is that? You will be able now to use this software to tell with pretty good degrees of accuracy where the market is going. Is it perfect? No, I don't have to tell you nothing is. But it's the only way I know where you can actually predict market moves, short, intermediate, and long term. Let me go into a kind of explanatory thing about the technique that I use for generating projections in market cycles. Again, those of you that are not interested in this introductory part, you can fast forward, go ahead and see what exactly we're offering and how you can get it. But I think if you're into markets, that you should watch this very carefully. Okay, I've done a sine wave animation in terms of theory of market movement that relates to cycles. And I'm going to show you that right now. It's broken up into 5 or 6 different slides. This looks, I think you'll agree, something like a typical stock market chart. There are things that you'll see on a stock market chart, like a support line, descending tops line, little triangle formation, a breakout of that and a big move to the upside, a breakout of the descending top and a nice move up. Do you know what this is? This is not a stock chart. This is a combination of 4 sine waves, exact sine waves, and a straight line at a certain angle to the upside. The straight line represents fundamentals. Let me show you that chart. These are the cycles. The combination, if you added all the cycles together at any point going across to the right, that's what gave the result of the chart you just looked at, okay? And this line is a fundamentals line. It's a relatively smooth line. We show it here as a straight line. Fundamentals go up at a certain angle, sideways, or down at a certain angle, and the cycles revolve around them. And it's my job to find out these cycles, what they're projecting, and what kind of prices they're leading to. Let me show you again an idealized stock chart to show you how we work that technique. Think of each one of these cycles as being analyzed in the following manner to find out what the projections are. Okay, here's an idealized sine wave. Top, bottom, and it completes on ad infinitum. Let's say this is 20 weeks from this top to this top. What we would do is take this cycle, which now is going to become this dotted line, and move it forward 1/2 of the cycle length. So if this is a 20-week cycle, we move this forward, the exact same cycle wave, forward 10 weeks. And when you do that, it crosses at the halfway marks of the cycle. You can see the one instance here of going up and right here going down. And here's the halfway mark right here. And that's the way we do our price projection analysis. Change that sine wave into an idealized, and obviously this is an idealized stock chart, and you can see what we're talking about. These dashed lines, simply the same pattern from 10 weeks backwards. So you take the midpoint of each of the bars, move it forward 10 weeks, and it gives you a nominal 20-week cycle projection. You start up here at 21, you cross at 15, that's 6 points, measured from the high to the crossing point. You look for another 6 points to the downside, that's 9, and it stops at 9. Okay? Yeah, I know, idealized. It's perfect for something that you look at and say, you don't expect me to believe that's going to work in the stock market, do you? Well, I've spent about oh, well over 50 years trying to prove that this is how the stock market works, and this is how you can get price projections that tell you where the market should go. Now, remember, each one of these cycles is a certain length. You start out with a very short cycles, analyze them. If they give you an upside or downside projection, you go to the next longer cycle. You get your projections there, and you go to the next longer cycle. At some point, you're going to reach a point where there are no further projections, either to the upside or the downside, and that's where you look for a turning point. Okay, that was fast, I know. That's the theory. We're now looking at TradingView and the daily chart of the S&P 500 cash index. And I think what I'll do here, just to give you a feel for how this works, is to go back to the bottom that was seen in March of 26, March 30th to be exact, and walk you through the analysis of short-term cycles leading up to longer-term cycles. Here is the settings page for Eliades Cycle Price Projections. And I'm going to start with the very shortest daily offset. These are different offsets here. These are for intraday charts. Here's the daily, here are the weekly offsets. But let's go to the daily offsets and go to the shortest one, 175. Okay, now I'm going to be zooming in and out so you can get a better view of what we're looking at here. First thing we want to look at is initial projections. Now notice these are the offsets. And when I showed you the technique behind how these offsets work, there was only one offset. This is my adaptation of the Hurst method. And on the daily charts, for the most part, what it does is give a range of offsets. I told you in this case it's 1.75 to 2 days. Okay, there were some moving averages on there that I mistakenly called the offsets. Here are the offsets here. 175 to 2. You see there's a crossing here. The software takes the preceding low, measures up to where the crossing took place with both lines and gives you a little box for projection. So here's the low, and the very next day, you got an upside projection and you met it. So now that was the shortest offset we use on the daily charts. Let's go to the next longer offset, 3.5 to 4. Notice that we've gotten something very significantly higher now. This offset is the 3.5 to 4, and it carries and gives you a projection way up here. Okay. So theoretically, at least, at the end of this completed bar, you know there's a really good chance the market's going to get up at least into this window. Okay. So let's continue now with these offsets. And let's go to the next longer offset in the daily group, 7 to 8. That looks like almost the same level as the 3.5 to 4, but here's the box. If you want to know the exact numbers, you hover over the box, and that gives you the exact upside projections, at least up to 66, 84, 72, and as high as 67, 63.03. That is a confirmed projection as of right here. So now you get up here, you've obviously reached it here, and you go to the next longer offset. The next longer offset is 12.1 to 13.8. At some point, but probably not now, I'll show you how I derive these offsets, because remember, they should be half spans of the actual cycles. Okay? Okay, we'll back out on the chart again now because we're getting higher and higher projections. This is the 12.1 to 13.8 offset, and these are the projections. Again, you hover over the top left circle here, they give you the numbers. So as of here, when you broke through completely, you had these projection numbers. We get up here, we want to know the next longer offset. Daily offsets, 24.2 to 27.6. Now we're talking chips and bananas. Now look at this offset. Now at this point, with this gap up bar, this projection has been confirmed because price is above all offsets. And you know at that point, these are the percentages of the projections, okay? Upside projection, 74%. So you know at that point, there's a 74% chance of getting up to this box. Here are the numbers for this box. If you want them, you copy them down. If not, let me go on. So that's the equivalent of a 5-week offset, nominal 10-week projection. And yeah, you waited a while, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. It was about 3 weeks later that you got up into this projection window. But the important thing is you had a good possibility, you knew from your projections, of getting up to this projection window all this time in here, where others might have saying, oh, there's a divergence here, oh, this, oh, the MACD went down, or whatever. No, not interested. Sorry, look at the projection. Okay, the next longer offset, 48.4. And look at this thing of beauty. As of this bar right here, you had a projection from the equivalent on the daily chart of a 10-week offset, nominal 20-week projection. There's the top of the projection window. And that's right almost perfectly where we reached on June 1 and June 2, around 2 weeks ago. That's the process, folks. That's how it works. Now, okay, so I shouldn't stop there. You say, well, what about the next longer offset? You're going to show us that? Yes, I will. And you'll see why I didn't go to it immediately. Next longer offset, ignore these over here. These are all part of the daily offsets, is the 96.8 to 110.6. Notice this has given a lower projection, and that's because in this move down into the late March low, we only got a little bit below the offsets, so you didn't have that much room to get a significantly higher offset. So far, of all the offsets we've looked at, this has been the winner right here, and what a killer winner it was, finding what so far has been the exact high in the S&P within points. Here's the 189 to 194. Nothing happened. This decline did not go far enough below to set off a new upside projection. So the bottom line is All upside projections on the daily charts were met with a meeting of the 48.4 to 55.3 offset, the equivalent of a 10-week offset. I went through this sequentially with you because I wanted you to get a feel of how you used the software. Okay? And with that, now that I've explained the basics behind it and the actual use of it with TradingView, you now have the opportunity to have this software in your back pocket, so to speak, analyzing virtually anything you want to analyze. The cryptos, oh, fabulous, fabulous. Sometime in the future, I'll show you a chart that shows how basically the exact high was called, the recent low. It's done a fabulous job with the cryptos. Does it work with individual stocks? Yes, it does, with varying degrees of accuracy, granted, but you'll find that out as you work with the software. This is perhaps the most exciting offer that has been made to TradingView customers because you finally have the opportunity to use the software that gives you actual price projections in the market, individual stocks, indexes, cryptos. Okay? So, what's the deal here? Well, the deal is this. Do I get to try this out without any obligation? Yeah, you do. You definitely get to try it out without any obligation. 7-day free trial. Well, what about after that if I like it? I promise you you'll like it. But after that, I hope I have these prices right in my head. $49 a month for the software. And if you're a trader and you can't take advantage of this and make it so much more worth your while than $49 a month, then you might not be that good a trader. Okay? $49 for the software monthly. Now, I also do a daily update for subscribers to my daily updates for $59 a month. But guess what? You can get both of those, the software itself, while you do your own work, and my daily updates. That's a $59 deal and a $49 deal for $89 in the bundle. Okay? So where do you go to do this? You go to our website, stockmarketcycles.com/register. And the offers should be there. Stefan told me that he would either have the page ready immediately for TradingView people or within the next 24 hours. Okay. So let's get this thing off to a big start here. This in a nutshell, folks, this is how the markets work. Okay. They work with cycles. You can see from the projections how nicely they have worked. Okay, now that I'm looking at the chart, I mean, we have other things that we can show you here. It should be obvious. You say, well, you just showed me one sequence of IDs. How about these? Well, okay. How about where does the bottom come on the way down? After these highs that were registered, 25, 26, early 26, we had this decline. Here is the 96.8 to 110 offset. Here is the projection. Here is where the market bottomed, right here. Satisfied with that? Well, if you're not, you haven't been following markets for too long. Now, go back here. Well, by the way, this is a really long term going. This one goes all the way back to the April of 25 low. Notice this projection given here. Perfect. Now, this was a big window, but you came right into the projection window before you had this significant pullback. Okay. So another perfect projection registered here. Now, look at this one. You say, oh, you screwed up there, Eliades. That one didn't show the bottom. Remember, you view these projections sequentially. This was just one of the steps on the way down, okay? This 96.8 to 110.6 offset. Okay, here's another beauty right here. This downside. Now, yes, indeed, you missed it by a tiny bit here, but this was a really big move. Okay, I've been moving the chart around. You probably looked at it for a few different angles now, but I wanted to show you this decline, okay? Virtually a perfect projection for this decline, too. If you had gone through the sequence that we just went through for the upside projection, you would be going through the sequence for the downside. One more thing to tell you, you can get both high-low projections and closing price projections. This one turned out to be a closing price projection, and this line goes across the lower part of the projection window. That's how much you miss by. Is this something that you would be interested in? If not, I don't know what you'd be interested in, I guess. I mean, this is exciting, exciting software that is now inches away from your hands to be able to do price projections in the market. Go to stockmarketcycles.com/register. Try it out. 7-day free trial. Try it out. See if you like it, and we'll work from there. Thank you for watching.